In addition to offering blowout deals like 2014 Silver American Eagles for only $2.39 over spot for any quantity, SD Bullion is excited to offer our customers exclusive specials that you won't find anywhere else. SDB was able to secure a sealed Munster box of each of the 5-ounce America the Beautiful coins released by the US Mint in the inaugural year of 2010. The stunning collector's coins commemorate Yellowstone, Yosemite, Hot Springs, Mount Hood, and the Grand Canyon. Only a very limited quantity was reportedly released by the US Mint, making the 2010 collection extremely rare and the most sought-after coins in the entire America the Beautiful series. Hurry, as these coins are sold out nearly everywhere. 70 individual coins and 30 sets are available for order now on sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, we've had another Fed meeting once again, and for what seems like the 500th time in the row, gold and silver were smashed on the FOMC release throughout the afternoon, with the raid culminating Thursday morning. Gold sold off to as low as a little bit below 1280. And, silver early Thursday broke actually below 1880. I think it was about 17 or 1877 was the low. And then we saw a big reversal here today on Friday to end the week with the unemployment report that beat expectations after the initial smackdown on the report. Silver spiked higher this afternoon, popping through 1950. I think it traded almost to 1970 before consolidating a bit here to close the week right around the 1950 level. And gold had a big burst up through the 1295 level, and then a second run through 1300, and actually closed the week here in the access trading market back above 1300. So once again, a big smash on the FOMC release, but then a pretty positive pop in the wake of that here in the latter stages of the week here in the aftermath of today's NFP, Eric.
Yeah, and it looks like this MOPE fiesta is got all of the charts painted in the right direction up until later on in the trading today, because this unemployment report really stunk. I mean, despite the headline numbers and whatnot, the labor force declined by 806,000 people, and the birth-death model that is used to approximate what the Bureau of Labor Statistics estimates as new jobs being created on the back of entrances of new companies and small businesses and so forth into the economy. I mean, they reported 234,000 new jobs in a statistical model, and it doesn't fly. I mean, there's no way that they could have created that many jobs in the real economy, given what's going on. So I think that, combined with the way the market reacted, initially the headline numbers scared gold and silver traders and gave a slight bid to the dollar, and people looking around at the stock market with favor. But now we see in the later part of the day that even the traditional traders they're being skeptical about this kind of stuff. I mean, it's getting to the point where the statistical manipulation of our data is at new highs. So we can celebrate the Dow reaching new highs. I guess we can celebrate the government and their BS hitting new highs. But the one thing that's interesting, too, that we should point out is that silver actually was unable to dive or be pushed below the price trace that it had done yesterday. And it's now leading the market up, and that's exactly what you'd expect when people are flipping back into the sector on a momentum trade with the assumption that the bottoms have been in. So, I mean, we keep bouncing back to this $19 level in silver, and every time we do it, we see large buyers coming in and speculators coming in. So,
and along that line,
trading range.
Along those lines, Eric, silver also failed to make it all the way back down to 1850 to retest its lows on New Year's Eve, which we've both stated we thought were the lows, and And that low back in New Year's Eve was a bit short of the low back last June of 18, pretty much on the nose. So that's encouraging as well, that silver was strong enough that it wasn't even actually able to make it down to 1850 to retest that the low to close out 2013.
Yeah, and it just looks like the selling exhaustion is in. There is the restrictive factor of physical supplies still being consumed at a very high level in Asia, and India has also been picking up in its silver purchases too. So between Asian market putting a floor on the demand and limited supplies for the cartel to be able to marshal to push prices down, it's just really hard to imagine the cartel having much success in pushing prices further below these support levels. So I think it's generally a positive.
And it seems like they might be aware of that, Eric, and kind of be aware of where they're at and their inability to push it down much lower, and be ready to, and that they're ready to start the managed retreat, particularly with the news that Reuters reported on Thursday that the CME is looking to introduce daily price fluctuation caps in both gold and silver futures in a bid to, quote here, rein in wild volatility. Reportedly, their caps that they're looking to instill are 1% daily moves in gold and silver. So it's rather fascinating that they weren't interested in introducing price fluctuation caps a couple of years ago, or back in April of 2013, when the metals were getting hammered daily to the downside, and they actually were volatile. But now that what it looks like a multi-year consolidation and correction is ending, suddenly we need price caps to make sure that the price doesn't change more than 1% a day.
1% on silver as well is kind of idiotic. I would predict that we'll probably end up, if they really do this and it becomes their exchange policy, we'll probably see 1% gold and 2% silver. I mean, 1% silver is the kind of move that silver can do just when you blink your eye. I mean, it's silly. But I think this really does speak to the fact that the CME probably in cahoots with, they play a role in the gold cartel overall, and in cahoots with that whole overall replication of the London gold pool, shall we say. It's looking at the fact that they don't have a lot of ability to maneuver around the edges here. They can't control this market very well. And if we were to see a big burst in buying based on some fundamental news or whatever that re-triggered the interest of momentum players that were also justifying their action of purchases based on some kind of geopolitical event, for example, like say something happens in Ukraine and then all of a sudden more buyers come to the market, to be able to quell that kind of momentum activity, the cartel would have to marshal physical supplies of metal to back up some of their efforts. It's, the paper manipulation can only go so far. So what the CME news or rumor suggests to me that they're physically trying to implement just an arbitrary collar on trading based on the exchange rules. Now, that's not going to necessarily do any good for them when it comes to the other markets around the world, but it's kind of like how when Bunker Hunt and his various copycatters that were jumping on board to try to ride the silver train up in the 1980s, one of the things that the exchange did was make it illegal to actually buy more silver contracts at a certain point in time, and basically the Hunt was only allowed to liquidate. So when you're able to control the rules of the system, you're able to manage the prices, and this is an act of desperation in my interpretation. I think it speaks to the fact that we're far further along in the end game than not. I mean, when you see headlines that make the conventional market thinkers scratch their heads along the lines of China becoming the world's most significant economy per the World Bank estimation this year, as opposed to only a couple years back, people saying, hey, China is going to be the world's most significant economy in 2025 or 2030. I mean, a lot of things are in flux right now, and to the surprise of many that are in the conventional wisdom, the CME effort is clearly a way of trying to slow things down. and they're probably scared.
And to put the numbers in perspective, today's intraday move off the lows to the highs here, we're looking at over a 4% move. And I mean, really, a 1% in silver, with silver at, say, 1950 right now, you're looking at 19-20 cents a day as the cap daily price move. So I think exactly as Eric stated, if they would, in fact, implement daily price caps like this, you're going to see really the footprints of the trading around the globe change. You're going to see all the action on the Asian and London markets, and really consolidation or capping throughout the day, and all the action will start at 6 or 8 o'clock Eastern time.
Yeah, and it just buys the cartel some time, because then they are able to, instead of dealing with a 5% up move in silver in one day, or 7% or whatever, I mean, when you look back at the last run we did to almost $50, you saw those kind of daily moves, and that's what they're afraid of. They don't want to see that kind of momentum run over the course of 3-4 months, where the metals just completely get out of control by their perspective. And you know, at some point, the pricing action is theoretically what they think is going to be able to be controlled just by giving them the time to come up with some silly headline, like maybe India is selling more of its gold from its central bank because they want to, you know, liquefy their current accounts problem, or who knows. You know, they can contrive any kind of silly story to try to manipulate gold in the short run, if they have the ability to squish it into a news cycle. And this is part of what this whole CME move is about. It's about the managed retreat, slowing down the process of metals moving higher, but at the same time acknowledging that they're going to go higher.
And the Indian story could be turn into a really big story shortly in the next month or two, with I believe it's Modi looking like he'll be elected, a very strong proponent of allowing gold to be imported into India after the last year, where they've really curbed imports and placed restrictions on gold. That if that happens, it really could be a game changer for global gold demand and bringing India back to the forefront.
Yeah, there's a lot of merchants that make a good deal of money in the Indian economy producing jewelry, both for domestic sale and export. And that segment of their economy was severely injured in the last 9 months, when all of this nonsense was coming on board to try to support the rupee and you know, deal with their trade flows and the capital flows in India. I mean, it would be wonderful if the new government would come in and say, hey, guess what, we're going to consider gold an investment and no longer consider it part of the capital account, and then all of a sudden the entire world's perspective on gold vis-a-vis India would change, because they would have no more justification to do these artificial efforts of excessive taxing and restriction on the import flows physically and all of this stuff. You know, this political party is a lot more business-minded and liberal when it comes to their perspective on gold. So, if anything, it's going to be a positive. But the outlier black swan for gold trading in a positive way could, in fact, be that they might even just change the way they classify it from an accounting point of view, which would be a major breath of fresh air. But I wouldn't hold my breath on that.
All right, we wanted to give the listeners here a quick update on the physical precious metals market here in the U.S. We didn't see too many changes over the past week. There have been plenty of silver coins available, both in silver eagles and silver maples. Pretty much, again, all of the authorized purchasers have coins available immediately for delivery. In premiums are really back to what they were about 18 months ago, prior to the big shortage developing. And that's silver demand remains very strong here, with silver under 20. We're seeing big buyers coming into the market. We haven't seen too many signs of a retail shortage outside of there continues to be a delay a bit in the sunshine products. And then also on the gold side, the U.S. Mint continues to force the authorized purchasers to purchase backdated coins as well as the current years. So really not too much has changed there. And then a little bit on the perspective of a producer, something that we've been really excited about, we've been working on for probably 3 to 6 months. At SD Bullion, we're planning on releasing our own coin series beginning in June, so we've been kind of working that behind the scenes, and even sourcing your own private blanks and rounds for that pretty readily available as well. So we'll have more information shortly coming out in the next couple of weeks here about that series. It's going to be called Heroes, and we're pretty excited about that. But just another side of the market indicating that there really is not too much of a physical shortage either in gold or silver right now on the retail side of the market, even in the face of China's massive continued demand, and with gold trading under the 1300 level for quite some time, and silver under 20. So I think a lot of that has to do with sentiment, and sentiment really has been hitting the bottom of the barrel for the last couple of months. Peaked up a little bit at the beginning of the year when we had some action to the upside, but overall, whether it's emails I receive, talking to other people in the industry, sentiment is probably remaining at a bottom or just near the bottom for the entire bull market. People emailing, why did I ever waste my money and time investing in gold and silver? I should have been in the stock market. I'm going back to the stock market. So I think that has a lot to do with it. Is the sentiment is in the doldrums and has been dragging along there for quite some time, Eric.
Well, the fundamentals overall have not degraded one iota, and on many different fronts they're stronger. The only thing that's really a headwind is just this perception that the U.S. economy is very strong. And frankly, I don't buy that thesis. I think that there's been an elevated level of manipulation of the statistics coming out of Washington since about January when it comes to the economy. And there are black swans everywhere, no matter where you look. And in the very least, looking at gold and silver as an insurance position, I think, is mandatory. And somebody might have difficulty dealing with the volatility in this sector, and in that case, it's definitely something that people should only own to the degree to which they can just sleep at night having their core position for insurance. But there's never been a time in modern history where this kind of insurance is valuable. So, I continue to believe that we're going to see a lot higher prices later this year, that tapering will end, and that we may very likely see alternative means of reliquefying the system, not so much of the type of bond purchases for treasuries and mortgage-backed securities that the Fed has been doing aggressively now, but things like debt jubilee for student loans, and less, or for example, changing the nature of way reserves are held on the Fed's balance sheet for other banks, and maybe even charging interest from banks. I mean, that would be very aggressive in putting money back into the economy, and I think that when the economy slows down, those are the kind of things that are going to be on the table and talked about in the media.
And I will tell you, you're going to see roaring inflation within 6 months if the banks are starting to be charged interest for all those funds that have been sitting on their balance sheets.
Yeah, I mean, this liquidity, this digital fiat currency that is out there in the form of debt that's sitting on the Fed's balance sheet has been created, and it will eventually have an impact on inflation and price of gold and the declining pressure, or the pressure for the dollar to decline. All these things will manifest. It's just a matter of time.
And those who really don't understand what the true definition and concept of inflation is, those who have been arguing, probably based on inaccurate government numbers, that there hasn't been any inflation over the last 3 to 5 years. There's been massive inflation the Fed has pumped into the economy, but you haven't inflation in the true definition of the increase in the money supply, but you haven't seen the resulting massive increase in prices, and I would argue that we are seeing an increase in prices, but you're not seeing 50 to 100% a year every 6 months, because all of that increased money supply has been held on the balance sheets of the banks. And if you reverse that and force the banks to start lending that out into the economy, you're going to see a resulting tsunami in actual price inflation within really 6 to 12 months.
No. And the shadow banking system's expansion prior to this big crash in 2007, 2008 was monumental. I mean, it's just unbelievable how much credit has been pumped into our system, and And all of that came crashing down, and then we're still suffering from it. So if it were not for the fact that asset prices were declining in most segments of real estate, and we had asset declines earlier in stock equity prices and so forth, but that's now having stopped. That actually, in a big picture point of view, can give a suggestion as to how far along the deflationary process has come vis-a-vis the amount of inflationary efforts that the Federal Reserve, Bank of England, and Bank of Japan, and so forth have been putting into global system. China too, very aggressively, and we've had this kind of tug of war between these monetary inflation and deflationary forces, and the Fed thinks that it can get away with taking away and tapering, but time will tell. I think that my original call and forecast that pretty much was set around November of the Fed beginning to put on the brakes in June with their tapering, I think is only just pushed out a couple of months further just because of the slightly stronger economy and the statistical aberrations that we're seeing. So this summer it's going to be pretty darn interesting, and then also that matches up with what may be black swans coming from geopolitical events. The situation in Ukraine is still a complete mess. The Western world is being spoon-fed a huge amount of lies when it comes to who ultimately was responsible for starting all of this latest chapter, and it's not going to be pretty. There really is no solution to this if the West continues to push their case by egging on the Kiev government to be aggressive, and that forces Russia to respond in territories where they have 80% plus Russian national native speakers, and eastern Ukraine being more Russian than not from a cultural point of view, going back hundreds of years. So it's going to be a volatile summer, that's for sure.
It definitely will. The CME hopes to make it not so in gold and silver, but we'll see whether that gets implemented or not.
Sprinkle some fairy dust on there, and maybe they'll be able to pull it off.
Right. Well, I think we'll wrap up here. Big day here Friday for gold and silver. Big moves for both metals. Gold trading back above 1,300. Silver trading back above 1,950. Don't be surprised to see a follow-on move on Monday, particularly in gold. And if we do see that gold moving back away off of the 1,300 level, I don't expect it'll be long at all before silver is retesting 20 and trading back above it at support. So we'll see how the market trades early next week. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.